Tim Quast. There we go, Dennis.
Boy, do I love Market Structure Monday.
Tim Quast.
Good day, Tim. He's always in a different house. The guy owns 25 houses.
It's live from one of my kitchens.
One of your kitchens.
So you see, I've got the coffee machine conveniently in close proximity because it's very early out here. I may need that. Yeah, we're big fans of the Gaja coffee maker right over my shoulder. Oh, that side. See it over there?
Yep, we see
wherever
it.
You can see it. Yeah,
we see it.
That machine is amazing. You can commute in it. You can make all kinds of foamy coffee drinks from that thing. It's awesome.
Tim, I want to ask you about something you said to me over the weekend. You said you have so last week we talked about why Microsoft and Facebook did what they did after earnings. And you have your own thoughts on that. So why don't you share with us your thoughts why you think Facebook went up while Microsoft went down after its report?
Sure. So the short answer is 2 words: market structure. As you know, that's what we talk about here, and I'll show you. But I listened to some of your comments there about Kathy and exchange traded funds, and I think it's a key part of this. A couple of interesting data points, and I'm going to lead this into Facebook and Microsoft. So, if you looked at tech and energy over the trailing 20 trading days, so energy, believe it or not, while it was the best sector on Friday, it was the worst performer of the 11 sectors over the trailing 20 days, about flat, off 40 basis points. Yet, if you looked at those 20 trading days and how many of them were buy days and sell days, we measure all that data. We're data geeks. The split was 8 to 12. So there were 8 buying days and 12 selling days. Then you look at tech, which was up about 7%. It wasn't the best performer over the last 20 days. Guess what was? Real estate, believe it or not. Of course, keep in mind, real estate's 2.5% of the S&P 500, whereas tech is 27%. And so it's an interesting contrast. Well, tech had 9 selling days and 11 buying days. That's the only difference. It's one day. And I think people don't realize this effect. This is the exchange traded fund arbitrage effect. It is if ETFs are a buyer one more day in a sector, that sector could be up 7% and another sector not move at all. And it's a great lead in to Facebook and Microsoft to me. There are multiple forms of arbitrage. There is the arbitrage between the ETF wholesale market and the retail market. You and I as investors, we buy shares retail in the stock market. So Kathy Wood does not. She's going to create those in the wholesale market in giant blocks that average, by the way, $24 million in a trade. So you and I are out buying them a share at a time. In March 2021, there was data out from the Investment Company Institute on Friday. They track this data. There's a 2-month delay. We track it too, and we compile it. So March was an all-time record for the creation and redemption of ETF shares. $750 billion of ETF shares were created and redeemed in the US stock market in March. Okay, so that leads into this idea of arbitrage. ETFs are an arbitrage trade. If the ETF is above the stocks that comprise it or are supposed to represent it, then you short the ETF and you buy the underlying stocks. When the stocks are above the ETF, you reverse the trade, and you do this throughout the day. This is what sophisticated people are doing. So that's one form of arbitrage. And why would this matter to you, traders? Because it's how the market works. And so you want to know when these things are occurring so you understand which side of the trade to be on. And we'll talk a little bit about Twitter in that regard too. But let me share my screen. So and we'll talk about the second part of the arbitrage trade, which is being long and short. And it's much, much larger than people realize because of the way that the market works. This is not classic, the third point kind of shorting, where you bet that something will decline in value because you don't like something about it fundamentally. This is about supply and demand. in the stock market. So I'm going over here to the Benzinga May 3 portfolio, and let's go look at Microsoft and Facebook. And by the way, traders, you want to join me, just go to marketstructureedge.com. You can sign up for free, and you can do this very thing. It's very simple. We don't look at charts. All we do is look at sentiment and short volume. And when stuff's rising, you want to own it. When stuff's falling, you don't want to own it. It's that simple. So let's look at Microsoft and Facebook. So I've got Microsoft right here. And notice this. It's so marketstructureedge.com, you can sign up. So it's a 5 and bottomed, which is odd. And it's 44% short. That is 44% of the trading volume is borrowed. But let's look at what happened right before Microsoft reported. Yeah. So Microsoft actually peaked here. This is where sentiment was 10 out of 10. And then what happened? Short volume jumped way above trend. Well, you want to leave right when that begins to happen. When sentiment begins to decline and short volume rises above the trend, there's the trend line, that's when you leave. And so when there is excess supply in the form of short volume, and investors who are looking at Microsoft stop what they're doing to see what Microsoft has to say, what you get is a supply-demand imbalance, and it goes down. That's what happened. It's got nothing to do with fundamentals. You know, I'm full of little data points. Here's one for you. So 1,000 companies reported results last week. 1,600 are on tap this week. Guess what the lead behavior was last week in the marketplace? Passive money. Not stock picking. Stock picking actually declined as a percentage of trading volume in the S&P 500. And the only thing that moved the market up and down was a 0.5% increase in passive investment. And that was because month-end window dressing requires it. And it tells me that market structure trumps fundamentals. So now let's go look at Facebook. Facebook will be the exact opposite of this. So if we look at Facebook, which is now 6 and up, so sentiment's rising above 5, more demand than supply. You could buy it. It probably will go up further. But here's the reason it went up and Microsoft did not. Look at the trough in short volume. It's that simple. If a stock has less supply and an equal demand, price rises. If it has more supply and an equal demand, it will fall. And it's that simple. And it's the importance of measuring short volume. Short volume is the supply chain of the stock market. High-speed traders like Citadel and Virtu and Hudson River Trading and Quant Labs and Finium and GTS and on it goes, those firms manufacture stock to create liquidity in the marketplace. And this is what we're tracking. We're tracking the fluctuations in those levels. Here too, again, this was a good time to leave, but notice that, that's probably a Benzinga notice. I think it was. Right? There you go. So I ride for the brand, as they say.
You're supposed to read. You're supposed to read that.
So here too, it peaked here, and here's high short volume, but everybody covered. It was the exact opposite. So the high-speed traders thought, this thing, we're okay if this goes up. I think the banks on the opposite side of the trade also said, we're fine if Facebook goes up, but we don't want to be exposed to the calls associated with Microsoft. So we want to be short that stock. And that is how market structure works.
So Tim, we got some big reports coming this week, so we always like to look, at what's coming up. I mean, it's a lot of mid caps this week. We've kind of moved away. We've got through what Kramer was calling the gauntlet, but we still have a number of major companies reporting. We got, I think, 300 or 400 almost every day this week. Right. If I'm right with those numbers, Spencer. Spencer wants to cut in there.
No, the exact number. I don't have the number for the week, but I can pull up a chart that breaks
1,600.
1,600.
Well, Tim knows it. Okay, so Tim's
right. Biggest day is Thursday. Thursday, 460 companies report.
Holy macro, 460 companies. The companies that I have on my radar for this week, and I just want to get the market structure thoughts on these ahead because obviously it matters. PayPal on Wednesday is going to be big.
Yes, it will.
And Etsy as well. So those are two stocks I'd be interested to look at from a market structure perspective, PayPal and Etsy.
All right, let's add them in here. And by the way, it's this simple, folks. If you want to add or subtract things from a portfolio, you just, to get rid of something, click the X. It's that simple. So now we can look at any of those. Let's look at Etsy. And by the way, I get inundated with emails. So people ask me about Appian, they ask me about Sonos, they ask me about Twitter. And I don't know, we may not have time, but let's look at Etsy and look at PayPal. So here's Etsy. And this is actually pretty appealing. So you can see once again that here's where Etsy peaked. So ahead of results, this is as sentiment begins to decline and short volume rises above trend, leave. Then if sentiment begins to rise back toward 5 and short volume is way below trend, this sets up the possibility of a very nice move with results. I'm not saying it's going to happen because some things are unpredictable, but and it's not a super strong sentiment chart. This is a much better one. See how quickly it rose back over 5. Well, you got a very nice price move there. That's price, by the way. This one's price. This is sentiment. And we say don't trade price because price is volatile. Sentiment is just this nice smooth line that you can follow. So I would perhaps take a flyer on Etsy because that's a pretty good setup. Let's look at PayPal.
Yep. So
PayPal right now is 5 out of 5, right at the nexus of supply and demand, but the trend is up. Short volume is only 36%. And guess what's leading? People are betting long on calls. Well, they could be wrong, but that's a pretty good setup without even looking at the data. So if we look at the data, I'd say, once again, this is not bad. This is very similar to where Facebook was when Facebook popped. It was about a 4.2. It just ticked up to 5. Today might be a very good day to buy PayPal. Short volume is below trend. It's come off its peak. I'd look at that and say that's something that's got appeal. And again, it's a probability. Market structure is all about probability. You want the supply demand probability to be in your favor. Both of these are positives.
I mean, that's all, all trading is probability to a certain extent. But if you can find that edge, and, I look at these, and without market structure, I'm just saying that, okay, well, it hasn't been running straight into the earnings report. So expectations aren't going to be as high as they might have been with Microsoft, which was straight up into the earnings report. So, and it looks like your numbers are tracking some of that in there. Obviously, your secret sauce, we don't know. But, you look in there and it's obviously tracking some of it in there. Just on expectations. So what you're looking is that maybe expectations for Etsy and PayPal aren't as high as they may have been in the past.
I don't disagree, and yet supply demand will in both those cases suggest that the probability is you would get gains. No matter what they say, that's the probability. Not perfect, but it's a read. So let's talk about Twitter briefly. So I got a question about this. People said, users of our platform said, okay, Twitter is a 1.8, but topped. What does that mean? And it's 56% of the trading volume in Twitter is coming from borrowed stock. So that means more than half of the trading volume is manufactured supply. So you have a lot of manufactured supply and very weak demand. What does that mean for the price? Well, it doesn't mean absolutely that Twitter's not going to rise. But I'd look at that and say, I'm not buying that yet. This is going to, when sentiment tops at the bottom, stay away from it until you see some improvement. We need to see this trend line in short volume reverse, and we need to see a much better move in sentiment to say that we want to come back to Twitter.
Do you like seeing the sentiment cross over the price? Is that where you really start to look when sentiment starts to cross over the price?
It's all about 5-5 to me. I mean, I buy rising sentiment and falling short volume. I sell falling sentiment and rising short volume. That's what you do. And so what you really want to see, here's the nexus. There's the scale, 1, 5, 10. And when sentiment is above 5, and you could, if you want to catch it before it gets there, but you can say, oh, look at this. This is demand coming into Twitter. And that's what you're seeing. This is what I mean about that arbitrage trade. What if ETFs now are long Twitter and short the ETFs that hold it? Well, you want to catch that. And then somewhere in here, when short volume hits a peak and sentiment's at 10 out of 10, that trade's reversing, and you now know. And so you say, well, now I'm going to take my money and go find something else that looks like this instead. That's what you want to do. And this is unrelenting because of the nature of ETFs. There are $6 trillion of assets in ETFs in the US market alone. And all they do is move back and forth about every 5 days, right? Up and down and up and down and up and down. So you can play that. That's what we're doing here.
Tim, what about Square? It's going to report on Thursday, and it's a widely followed stock, widely owned stock as well. What does sentiment look like in Square?
Let's take a look. SQ, right?
Yeah.
All right. Yeah. I've got a question about that too. Okay, so same drill. I'm just going to save it in here. I can search by ticker. There it is.
240, 250.
Okay, so yep, 244 was where it closed Friday. 3.4 sentiment is up. Short volume's high. So this is almost a straddle. It tells us that sentiment is rising. Short volume's a little below trend. I look at that and say there aren't a lot of gains, but if you're happy with a 3 or 4% move in Square, you probably get it because sentiment is rising. See that line? Sentiment is rising. Doesn't matter what the price is doing. Price is falling, but short volume is just below trend. It's at 50. But the same drill here. We saw a whole bunch of, why were all these stocks 10 right here? Because options expired there. That's where it happened. And all the trades changed. And when do they shift? Month end into the new month. In the new month, all this money in 401ks, et cetera, comes into the market and has to get deployed. Well, we can get an idea where that stuff is going by understanding what stuff has lower short volume and rising sentiment. I'd say Square isn't awesome, but probably gives you, 3, 4, 5%. It's a quick trade, a classic swing trade.
All right. Tim Quast is the founder and CEO of Market Structure Edge. The link is up on the bottom of the screen. Tim joins us every Monday for Market Structure Mondays. Tim, we'll talk to you again next week.
Good to see you guys. Thanks a bunch.
Thanks, Tim.